Hello traders, we're going to start with an in-depth analysis of buying and selling pressure that's occurred in the market going back to the high of April of this year at 11,257 in the Dow. And we're going to try to examine this in some historical context. Unfortunately, we can't go back more than 180 days on a 2-hour chart in the Dow Industrial Average under the TOS charts. But I'm going to try to give you some idea of how the current rally is stacking up against my historical knowledge of the rally that happened just prior to October 2008 before the market started to decline. A couple of interesting things. Now, we're going to do this for determining when an uptrend has ended, and then we're going to start to look at also we can also take a look at when a downtrend has ended and so forth. But using MarketXFactor as our indicator has been extremely helpful. On the top of the screen, we have the prices. In the second box, we have the MarketXFactor in real time. And then in the bottom, the indicator screen window, we have MarketXFactor on a 21-day moving average. What I'm going to show you is how the buying and selling waves come through. We're specifically looking at just the buying waves right now to see when they terminate, when they end, because I've been looking now for a top of this market for a few weeks here. I've been looking at the market as it continues to go higher to determine exactly when it might start going down. So let's take a look at the period just prior to the peak in April, which is 11,257. This period right in here was on the very high was on April 26th. At approximately 1 p.m. Now, what's interesting is just prior to that, at this high right here, which happened around 10,970, just below the 11,000 level, we had a peak in the buying pressure of the MarketXFactor indicator, which means that there was, in what MarketXFactor really does and tries to accomplish here, is determining how many people are on one side of the trade. So anytime you have a scale here from 0 to 1, which is really representative of 1 to 100%, if you look at it that way, and anything over 80% is an extreme. So for example, we see that the buying pressure is represented by the green line here, or as you can see, it's really highlighted in blue when I highlight it here. That means that 80% of the trades for that day were on the buy side. In other words, people were just flowing into stocks on the buy side. 80% of those who were trading that day were buying and putting their money into stocks that were going up. Usually when you get an extreme of that nature, then you start to look for a reversal. You don't know if there's going to be reversal yet or immediately. However, you begin to look for a reversal at that time. You can see what happened here. We kind of peaked out. We did have a little bit of selling coming in, but as you can see by using MarketXFactor in real time, that the selling pressure was relatively light. Normally, when it stays below the 80% level, you know that it's fairly weak. So in order for the market to really have a significant downturn, usually what happens is you have a lot of people selling at the same time, and it will reach over 80%. That means 80% of the day, 80% of the money that's going into the market for that day is going into stocks that are going down. So there's a lot of heavy selling pressure. Well, in this case, there was very little selling pressure coming into this market as it declined. So we had another wave of an advance. People were just not willing to step in and sell at that time. So we had another wave of advance, which led to a minor peak right in here, which is right in here. No, I'm sorry. Actually, it's over here. This little minor peak brought in some additional selling. Now, this is a little bit more significant selling because we reached over the 80% level. However, it didn't really seem to last because the very next day we didn't have any follow through whatsoever. Right in here, you can see that the MarketXFactor peaked out. There was very little follow through on the selling pressure. So we had 1 day of selling pressure and that was it. And the very next day, the market started to rally again. Now we hit another peak. We hit this peak here, and that peak corresponds to, let me just bring up the rectangle tool here. This peak in prices corresponds to this reading. So we really peaked out in buying pressure here. There was no real selling coming into the market. And then we reached another high in prices here, telling us that in fact there was very little buying pressure, very few people were chasing this market, very little money was actually going into the stocks that were driving this market higher at this point, and it shows up as being under that 80% level. So you can see that the market buying pressure is really starting to decrease. There is very little buying pressure coming in, and this opens the door for people to come in and start selling the market in a significant way. On the MarketXFactor 21 period moving average, you can see that we were really in a period in which there was alternate buying and selling waves of little significance during this period. However, prices continued to rise. And in the real-time MarketXFactor indicator, you could see that the actual pressure, the amount of buying in the market at this period was significantly low, even though we've hit a higher price. That is generally the best time to start looking for the market to decline, and that is the time in which you want to go short the market. And that's exactly what happened. Right after that, we had a significant amount of selling coming into the market, and that's what happened at that time. So we're not going to talk specifically about finding periods in which the market is declining and turning around, but I will mention a couple as we go through it. But right now we're looking at the current rally and also looking at the previous rally to see when market prices might top out and what the signal from MarketXFactor would be to help us determine when that next leg down is going to be. So using MarketXFactor, we can determine that this was probably the selling point. This was a perfect opportunity to look for an opportunity to go short. The market did decline, it had a little bit of a rally back, but once again, you can see that the rally back had pretty low buying pressure. The market started selling off again, and then once again, we had an opportunity right in here to see that there wasn't really a lot of people coming into the market to buy this market, and then the earnest selling started, and then of course this was the flash crash in which the market declined significantly, and we had a pretty big peak, pretty high peak here in the selling pressure, which topped out at approximately the 9.97. You can see on the indicator right in here, this yellow mark here, that peak is 0.9736. That means that of all the money going into the market, 97.36% of all the money going into the market was going into the sell side of the market. People were selling stocks like crazy. There was hardly any, less than 3% of the less than 3% were actually buying stocks. 97.36% were selling, and that's what causes this peak in the MarketXFactor.